What's up, YouTube? It's your boy Steve from Printer Gang Investments, back with another video. And in this video, we're gonna be talking about a lot of stocks that we think could be something this year, things we might pick, things we might add to, and macro situations, things I think we should and shouldn't get involved with going into this year. I'm doing this video because a lot of stocks we need to pick aren't necessarily in the portfolio that I show every day. So we need to talk about it. So first stock I want to talk about is two that I actually traded last week on another portfolio. I did some risky calls, so I didn't put it on the main portfolio. HIMS and Tempest AI. HIMS, you know, they got the Ozempic for the low, man. And you know, they got a lot of other products, hair products, ED products, a lot of other things, and they've been growing fast, man. They've been growing fast. They done went from $8 to like 40 something almost, like not 60, I think. Let me see what the price is of HIMS at the time of this recording, man. Let me see, where's my HIMS at? 60 bucks. Yeah, man. So with HIMS, I would say the risk is like a medium risk. I'm not really scared of losing all my money in HIMS or nothing like that, but there is a risk of like a fairly significant drawdown if something were to go wrong with HIMS, especially because it's already rolled so much. So as far as HIMS, it's not something I want to make a major share position in right here because it's already so high. But if I can get an entry on some call options, I'm interested in HIMS. The same goes with Tempest AI. Is Ryan crazy? It's a brand new company. I wouldn't necessarily advise people to go overweight it, but you know, if same thing, if I can find an entry on the chart for an option, I can make some good money with Tempest. And if it keep going, we might end up with a little option position that keeps going and rolling. Like I traded Tempest last week and I made like 100%, but unlike I do on this channel, I actually just took the gains and didn't roll. I should have rolled because it went up again the next day. Probably would have made it more hundreds of percent. But those is two stocks right there I like. As we've been talking about on this video and in the comments, we looking at the whole cybersecurity and AI software era build out, whatever you want to call it. That's both the wrong words. But the Salesforces, the CrowdStrikes, the ServiceNows, the Cloudflare. It's a lot of them. It's a lot of them. All those stocks, they're a lot safer as far as the companies because a lot of those companies are more established. So as far as the risk on the shares, it's not as big of a risk as some of the smaller companies we talk about. And that's what I'm gonna start doing on this channel. I'm gonna start like explaining to people the risk that at least I feel investing in this stock versus this stock. So as far as the software trade, companies are bigger, more established, been profitable for years. So on that end, we really run the risk of maybe buying something that's already ran, like a CrowdStrike or what's the one? Cloudflare. So in that area, I would advise people to, and not advise, but if you are gonna get involved with that, I would personally wait for a pullback to get my big position. I would start a position, you know, wherever, but I would not go in all at one time. That's why y'all see me buy things $5, $10, $15, $20, $30 at a time, because I don't necessarily like to just go in on things, if you know what I mean. I'm also looking at Symbotic, man. You know, I got Symbotic in the portfolio, but you know, we had a small amount. We've been watching it. I've been doing more research, and I don't know how I overlooked this. Symbotic actually is profitable. And I was doing a deep dive on research between, you know, the big robot makers right now, which is Tesla, Figure AI, and Apptronic. We also got Symbotic, but Symbotic doesn't make humanoids. And I was wondering why they weren't getting all that press like the humanoid makers. They don't make humanoids, but they are making robots for these warehouses. They're partnered with Walmart. They're trying to put it in all the Walmarts. I'm talking about this is job taking robots. They talking about warehouse working robots. But they just went profitable. It's risky. That one's a riskier one. It's not like the software trade, smaller company. It just went profitable, but it's just went profitable. So you know, we run a decent risk. We don't run the same level of risk that we would run with like what happened with Serve the other day. It was less than profitable. Nvidia says one bad thing, they just fall off a cliff. It's not like quantum, but it's right behind it. So, you may not get the 40% down day, but you might get that 20% down day, that 16% down day. You know what I mean? So that's the way I feel about Symbotic. Other trends that I want to talk about, because I don't want my subscribers to get caught up out here. First and foremost, most importantly, is the hardware AI trade. And as I said on a bunch of videos, because I don't want anyone to misconstrue the following statements, I don't think that anyone needs to be selling any hardware AI stocks. I don't think people need to be getting out of hardware AI stocks, but I don't think now is the time to be overweight hardware AI. I think now's the time to be more neutral hardware AI, because I feel like, yes, there's going to be growth, there's going to be gains, and I might be wrong, and one of these companies massively outperforms everybody. But on the AI trade, I'm looking more towards software and energy right now. So I don't really think we should be like just going crazy buying a bunch of Nvidia. I mean, at least not if your goal is to like outperform. You could market perform, you know what I'm saying, with Nvidia. But when a stock that big just had a ride like it had the last 2 years, I seriously doubt it's going to keep going at that rate. Not that it's not going to keep going. That's why we hold Nvidia and buy it. But it's the reason why we buy it slow, because I'm more of the camp that says Nvidia is going to 800 in the next few years. You know what I'm saying? I'm not in the camp that says Nvidia is going to blow this year. So that's how I feel about the hardware AI trade. Now, another trade I'm hearing people talk about in my community specifically, man, people talking about a DEI trade. Don't do it. Don't do that. Don't do it. A lot of people mad because they cut DEI, Trump cut DEI, and now they talking about they want to short Target and they want to try and get the company to sell off. It's not gonna work. Like, if you know anything about the stock market, that's not these companies' first time dealing with this. And the reason I say this is not because I'm for or against DEI. I'm saying this because I seen what happened last time. If you know anything about those kind of stocks and DEI and the history with it, it hasn't been a good one. Target specifically, they're one of the first companies to get aboard the DEI wave, and they did a lot of promotion for the LGBTQ community. So they put a lot of LGBTQ merchandise in the Target. So all of a sudden, people who weren't in the LGBT community got mad at Target and stopped going to Target, and their stock got hit up and the sales went down. So Target tried to appease both parties. They took the same promotions they put up for LGBTQ, they took them down. Then guess what they did then? Then they made all the people in the LGBTQ community mad. Then they protested and stopped buying, and the stock went down some more. So a lot of these companies, the sentiment I be getting from my research, they don't care what y'all talking about on DEI, because they said we tried it last time and it backfired last time. So the way they seeing it is, I done heard the sentiment. They say we never should have did it in the first place, because we did it to try and so-called help, but the numbers didn't add up. After years, this number didn't add up, that number didn't add up. So they said, let's just go hire the best people. And now they getting even more backlash. So they took a loss when they decided to do it by not necessarily hiring the most talented people for every position. And now they're taking another loss because of the backlash. So they said, yeah, all right, y'all talk all y'all want. We'll never do nothing like this again. So yeah, I wouldn't necessarily take that trade. Like, I would never buy puts because I'm salty about something that's crazy. Like, I'd be mad at DoorDash, and I do want to short the stock, but I'm not going to short the stock because I'm mad at them. See what I'm saying? It's about the research, people. So, those are a few of the stocks, few of the things I'm looking at. What's going on in these markets. Like I say, last but not least, we got to speak on energy. Oklo. I like Oklo. Oklo's first one to go. What I don't like about Oklo is Oklo's also less than profitable, so we could deal with them 25% down days plus and all that. That's why I got Cameco, even though Cameco's not moving yet, because at least it's profitable and established. I'm looking for more AI energy related trades. That's why we got Vistra Energy. It's a mixed bag with those. If you got a stock like a Oklo, I would say, like, balance sheet wise, it's the kind of risk you're dealing with, like what just happened with Serve Robotics, like what you just happened with Quantum. The reason I give them a little more credence is because the technology they're trying to do is right around the corner versus a Quantum whose technology is like potentially years away. They say it ain't, but you know, Nvidia them say it is. We'll see what happens. But that's what I think about that. Let me see, is there any other stocks we missed? Nuclear energy. Yeah, that's just basically what we're thinking right now. That's basically what we're thinking. Now, I also think there's a lot of opportunity. I want to start looking at some of these smaller stocks. Not smaller stocks, some of these bigger stocks, some of these dividend stocks that were already performing pretty well. But now that AI is in, I'm going to do research because it's like, all right, we got somebody partnering with Walmart. You think that's not going to help Walmart's balance sheet? See what I'm saying? Home Depot, Caterpillar. Let's see, what other ones I like in that sector? Even Target, as much as they hating on Target right now. We need to take a look at that because I think in that sector we could actually have some surprise AI winners because these technologies help those kind of companies save money. If those kind of companies start saving money hand over fist, it's going to report on their balance sheet and their stocks could go crazy, not crazy like hundreds of percent like what we see with like the Nvidias and the Palantirs, but from an options point of view, let's say Coca-Cola has a 30-40% year. Oh my God, you getting rich off options. And I'm not saying I think that's gonna happen or nothing like that, but I'm paying attention to all that because it could be a random opportunity over there that people aren't necessarily seeing right now. So you know, those are just some of the stocks I'm looking at right now. And some risk of each. We're gonna be doing some more videos like this. We're gonna be doing probably some more detailed videos like this. I probably go in the house instead of sitting in the car, get on the MacBook, pull up some charts, you know, so we could do some more in-depth chart and not just a little chart I do on the phone. But you know, it's your boy Steve from Printing Gang Investments. I'm gonna see y'all in the next video.